Hi, I'm Eriko Kasaoka from Osaka Seiki University in Japan. So first of all, about myself, I've got my PhD in 2013 and I'm an assistant professor at this school. So today, I'm really appreciated to have a presentation this time. Thank you very much. So today, I'm going to talk about the economic consequences of the convergence with IFRS in Indonesia. So this topic is about accounting. So from here, I'm going to talk about the aim of this study. So there is a set of accounting standard which can be adopted by any country in the world, which is called International Financial Reporting Standards. So I call it IFRS from here. The IFRS mission is to develop accounting standards that bring transparency, accountability, and efficiency to financial markets around the world. So here shows the countries requiring domestic public companies to adopt IFRS. Currently, there are over 130 countries and jurisdictions adopting IFRS. Areas colored blue require firms to adopt IFRS. So focus on ASEAN countries. Countries colored red adopt IFRS. So this table shows ASEAN countries adopting IFRS for public companies. ASEAN countries consist of 10 countries. 7 countries out of 10 adopt IFRS. However, Indonesia, Thailand, and Vietnam convert their national standard with IFRS. Indonesia accounting standards have been converged with IFRS since 2008. However, there are still several differences between IFRS and the Indonesia accounting standards. So there are accounting treatment for land, several IFRS standards which have not been adopted, and accounting standard for Islamic finance. So I'm wondering that the convergence, not adoption, with IFRS still have a positive effect on the quality of accounting standards. Therefore, this paper reveals the relationship between the information asymmetry and the convergence with IFRS in Indonesia. So this table shows the introduction and the reorganizations of accounting standards setter in Indonesia. The first codified accounting principles was published in 1973. Accounting standards and the accounting standards setter have been developed to revitalize Indonesian capital market and improve the quality of accounting standards. In December 2008, the Indonesia Accounting Institute (IA) publicly announced a full convergence project with IFRS by January 2012. This decision was prompted by economic incentives and political pressure. As for economic incentives, adopting standards equivalent to IFRS increases the transparency, comparability of accounting, and decreases information risks. Therefore, it could be expected to increase GDP, expand economic market, and meet the demand of foreign investment. And regarding to the political pressure, Indonesia is a member of IFAC, so there is an obligation to converge their national accounting standards with IFRS to become a member of IFAC. Here shows the process of a convergence project with IFRS. As I mentioned before, in 2008, IAA announced the full convergence project with IFRS. In 2012, Indonesia accounting setter DSAC endorsed 35 PSACs, Indonesia accounting standards. There was a 3-year gap between IFRS and Indonesian accounting standards. In 2015, These are amended and replaced the 10 PSACs equivalent to IFRS, also introduced 4 accounting standards. There is still a 1-year gap between the IFRS and the PSACs. They are still making amendments between PSACs and IFRS. It is expected that the Convergence project with IFRS since 2008 would increase the transparency and the comparability of accounting standards in Indonesia. Therefore, this paper examines the relationship between the convergence with IFRS and firms' valuation and the level of information asymmetry. I employed Wilcoxon-Rank-Sum test and multiple regression models for this research. For the regression model to test hypothesis 1, I employed the Tobin's Q as a dependent variable, and I categorized the time between pre- and post-convergence. The time is before and after 2012. The second formula is for the hypothesis 2. To see the level of information asymmetry, I use stock turnover, and I employ debt-to-equity ratio, ROA, using net income, asset growth, market value of equity, inflation, and firm size for control variables. So here shows the number of firms. I collected data from EOL, Asia 1 data, and data stream. I selected listed firms from 2001 to 2019 in Indonesia, and there are 5,664 companies. And I eliminated firms with listing period of less than 1 year and data missing. The total number of firms is 5,248. Here shows the result of Wilcoxon-Rank-Sum test. The coefficients of Tobin's Q, market value of equity, and firm size in post-convergence are higher than pre-convergence. Debt-to-asset ratio is lower. So these variables show that firms have more equity after the convergence project with IFRS. And here shows the result of the regression model for hypothesis 1. This shows the convergence is negatively related to firms' valuation. However, profitability, asset growth, and market value of equity are positively related and significant. So this table shows the result of hypothesis 2. Firms' stock trading volume is not related to any independent variables other than leverage, as expected. As for market value of equity, stocks might be frequently traded when the stock prices are lower. Therefore, the expected sign shows the plus, but the coefficient sign shows the minus. Here is my summary and conclusion. Wilcoxon-Rank-Sum test shows that the leverage and market value of equity increase after the convergence with IFRS. So it is assumed that firms have more equity after the convergence with IFRS. However, the result of the regression model of hypothesis 1 didn't show that the firm's evaluation increased after 2012. Also, the result of the regression model of hypothesis 2 did not show that the stock trading volume increased after the convergence with IFRS. So from these results, I still want to work on this research. So for my further research, I would like to employ several different dependent variables other researchers use, including zero returns, price impact, and bid-ask spread. to examine the information asymmetry and the convergence with IFRS in Indonesia. And I also want to examine the data of all ASEAN countries and compare the result between countries adopting IFRS and converging their domestic accounting standard with IFRS. Thank you very much.